Good morning, everyone. Good morning, good morning, and welcome to our Microefutures Upside Down Markets Globex session. I hope everyone is surviving this downturn. As with everything in this market, this too shall pass. Hey, Ben. Hey, Kevin. Hey, Manveer. What's up, brother? What's going on? Well, it's absolute carnage out there. And because it's. Hey, Raj. Morning, brother. So it currently costs at the discount brokerage firms, it's like $19,000 to trade an E-mini. Just crazy margin. The brokerage firms are forced to protect themselves. It's the only way they can stay in business. One or two retail traders to blow up a brokerage firm. Um, this market is very difficult to trade. And since retail can't manage risk, they have to take it out of their hands. So we're going to talk a little bit about what's going on and what we can expect. Um, in front of you, we have this is a weekly candle chart. And I had to use candles to go back. And we had a level at 48.28 and a quarter. These balance levels that we use. And they seem to work quite nicely when the market falls apart. So our overnight low was 48.32. And the level that we were looking at is 48.28, which we failed to actually hit. So it's not a look below and fail, it's a fail to look below for the time being. Now, when markets fall apart like they have in the last couple of weeks, levels are really only just that. There's no magic level that's going to stop the selling. These markets, and I've been saying this now, I was putting articles in our trading room in 2021 about how people are using leverage to trade and to invest. And this is what happens when you build a market on the backs of shorts. We had huge, huge short positions when we took the markets up. And so when you actually drop a market, when there's no buying and the sellers start to compete and they start taking out these swing lows, when you take out those lows, all of that just comes dumping out. Now, there's numerous reasons of why this happens. Number one is credit, right? Everybody trades on margin, right? Except really, really, really wealthy individuals and massive money managers who buy stock for cash. So they're not subject to liquidation. Okay? Hey Tim, how you doing? So those those people, they can buy more, all of that stuff, or wait it out because they own their investments in cash. Now, what we've done is we've gone and we've changed the macro conditions so that affects earnings, right? As soon as you affect earnings, the status quo, which was this, that gets interrupted. And it gets interrupted in a very rude manner, okay? So when we have that sort of thing happening, we don't know where the bottom is. Don't try and find the bottom, right? There will be, as the old traders say, there will be generational buying opportunities, but just not today. Okay? What you want to wait for is you want to wait for this market to calm down, things to start getting back to a normal backward, back and forth kind of a motion. let's go take a look at what happened. We had a gap down. We had a close up here in that close to 5,100, and then we gapped down and opened here. And we opened at 5,007 and then just dropped like a stone because there was nothing in the order book to help hold this thing up. It just fell apart like a cheap suit. And, we've been saying for a long time that when this market does come apart, it's going to be like this. It's going to be ugly when it comes apart. And unfortunately, because of the nature of finance people like to push the envelope as much as they can when things are good, and when things are bad, they just go, oh, well, market risk, too bad, so sad. Um, because they've already made their bonuses, right? Bonuses have been paid on Wall Street. So now these guys we're just resetting our cost basis, right? We're going to reset the cost basis of the market, and it's a fire sale right now. Let's see what holds for us. I've got these balance zones, and this is how bad the sell-off is. The sell-off, I don't know if folks remember. If you guys remember who've been with me for a while, I used to do these 8-point levels, right? Every 8 points, because the market would sort of obey them. And then I started doing the balance zones within those. So we're back under 5,000, where I left that in the charts. And so we're back. We're back to where we started. And hey, those are markets. I've done many a short squeeze in my time, and when the short comes apart, it just unravels, and people who are long just get decimated. So that's what's going on now, right? We don't know what this gentleman is going to do with the tariffs. Stuff's being initiated, and then there's reciprocal and all that stuff. So those of you who are, I don't know what the prop firms are doing. I was going to ask, those of you who are trading at prop firms, what are they doing with people who are trading cash accounts? And I'm not talking evaluations. Anybody out there? No one? So all you guys are just trading evaluations? Because I can't imagine they're letting you actually trade real money. Hey, Moran. Hey, Jirash. What's going on? I mean, evaluations, I can, that's basically the sim. Can't trade beyond 5%. Nothing is off the board this morning. Everything, you know, is on the table. So that overnight low that we have down at 48.32, do not be surprised if we go and test it. Okay? That very well could happen. Don't be surprised if we go test it. I've got, for folks who are interested, I've got a big balance, 49.23 half to 41 and 3/4. And you double it to the downside, and that's 48.87. And we just did a look below 48.87 and fail. It's funny. It's really surprising because now I know how many people are actually trading real money. Most people are trading on the evaluations, which, because if you guys, if people had been trading real money, they'd be like, oh, okay, well, like, YW said can't trade beyond 5%, but he was the only one out of 50 people who answered. So 1 out of 50 people is actually trading real money. The rest of them who are posting those huge profits, now we know that they're not trading real money. So look below and fail of 48.87. Let's see if these old levels from a few years ago work, the blue ones. And the red boxes are, of course, the balance and the discount levels. Right? As you can see, the spread is quite large. The market action is not exactly family friendly. Right? When you get up to that 4,900 level, there are going to be sellers because that's where they initiated on the way down. So the sellers here stepped in at 48.96. So, hey Jerry, how you doing? See, they were selling in here. Now they're selling here. So this is a great time to educate yourself and learn. The markets are going to be very challenging, probably for the whole month. Okay? Just so you know, the markets, they're going to be challenging for a while. They're going to be challenging probably for the whole month. And just get used to that. Don't try and get yourself in a bind by over trading, by thinking that you're missing opportunity, because you're not missing opportunity. Okay? You're not missing opportunity. Opportunity, the thing is, the way you have to look at this is now opportunity is being created for you. The question is, will you have any money when the opportunity is really there? Hey, LC, how you doing? 47.55 is the first level. Okay, that's what you're looking for a bottom. Hey, LC, you trade using these funded accounts. What's going on there? What's the word? I mean, I can't imagine it's a free for all. So what we do with these discount zones is this was the balance, right? This is double the balance. And everyone's talking about limit down, which is what, 7%? So let's talk about that. So when markets lock limit down, and this is why retail traders should not be trading. And we're not trying to discourage you from making money. We're trying to keep you from blowing up your income and your life and getting really stressed out. Um, yeah. So the prop firms don't care. So, which has got to mean they don't care if you're trading and it's 19 grand a contract to trade the E-mini. How do they how do they manage risk? I'm just curious. It's weird because I ask that question all the time and I can't get a straight answer out of anybody. It's really weird. They have a max loss for the day or per trade. Okay. And does that get adjusted during times of max margin? Just curious. Yeah, most people who trade evals are still on sim. Yeah. Okay, we're going looking for the bid. There's a stop at 48.71. I would imagine so, yeah, because their firm is, they're letting, it's like margin, the brokerage firms give them margin and they give you margin, so it's like it's a bit of a daisy chain there. If we take out that 71, what I'm doing right now is we're looking to see if these levels have any validity to them at all, right? I would caution if you are trading, right, to just keep your risk if you're short under 48.90, 48.87, right? Just watch the market as it offers lower, right? What can happen in these markets is once the sell orders are complete, you can get a massive big green candle. And I want to congratulate the people who got payouts last month before this all started falling apart. Now keep that money. Thanks, Phil. See, one big green candle. If you're short in the wrong place, right? We took that stop. We anticipated a little buying where you take a stop. So when you say if you were short at 80 and it came down to 72, or you should do some covering there before it goes back up on you and takes you, right? So when you have candles that are 20 points, 15, 16 points for a 1 minute, right? And then the seller stepped in, right? So it's 2:45 in New York, Europe, London. They are all waking up, looking at this and selling what they have. Most of the selling that you are going to see are forced liquidations, okay? There's going to be a lot of forced liquidations because you'll see things like, Bitcoin, which really held up nicely on Friday. Last night, somebody hit it hard, and that was, they probably saw the pre-open of the U.S. markets and they just got out of whatever risk asset they could. So really nothing is safe. And anyone who's trading on credit um, is just getting blown out right now. Is it possible to use your trade setup on premium trade? You can use this trade setup on any 1 minute candle chart where you have the ability to draw a box or a straight line. That's the limitation of my thing. If you have a 1 minute candle and you can draw a box, or if you can draw a straight line, you're good to go. So whatever software you're using, you can use, and whatever asset you're trading, you can trade. You can use this for stocks, you can use this for Forex, you can use this for any market because all markets have inventory and all markets have order flow. So if any market that has an order flow and inventory, which is the definition of a market, you can use this. It is the simplest way to trade. And my trading method, it's not my trading method, it's the market's trading method. That's the thing, right? This is what everybody who retail trades, they have, well, I trade EMAs, I trade fibs, I trade this. You guys are all trading order flow, even if you don't want to admit it, right? you're trading order flow, and you're trading inventory. Most people don't even know what inventory is, right? The market has an inventory, and right now the inventory of the market is above current price. That's why we're having selling. When the market inventory is below current price, we take that inventory and we sell it for profit. That's called distribution, right? This is basic finance. It's not even finance. It's just like if you've had a lemonade stand when you were 4 years old, right? The ingredients of your lemonade should be cheaper than the price that you sell your lemonade at so you can make a profit, right? Right. So this is like COVID, but the price action isn't as violent as COVID. Last night's open was a bit violent, but COVID was much more violent, which tells you the financial system, the plumbing under our financial system, the clearing and the settlement is working. Right. Thanks, Elsie. What are you doing up at this hour? Can't sleep? Next set of stops is down here. The low of T. This is from when we did the price discovery last night. So we're going to go find the bid. Every time a market opens, we are going to um, we are going to do some price discovery. And price discovery can be violent, right? Price discovery can be violent. And you should not get in the middle of price discovery, right? That's for large firms. You're going to have clearing firm sellouts. You're going to have, brokerage firms will go out of business. Ones that are undercapitalized, right? We're down at 5% now, 4.9, close enough. Hey, GL, how you doing? And welcome to all the folks that are watching us on YouTube. I'm not calling out any trades right now. I'm just trying to give people a sense of what's going on. If you can keep your head during this time, you will actually be able to learn a lot. One of the big things is to learn when not to trade, right? There will be opportunity, right? You might have to wait a day or two, right? I mean, you look at traders, you know, traders who have been trading 40, 50 years. I've been doing this 33. Uh, if they're saying this is the craziest thing they've ever seen, it's uh, definitely worth paying attention, right? If large hedge funds and money managers are being careful, you should be too. How often do I draw inventory lines? I usually do them at the beginning of when I start trading. If the market makes a huge move away from that cost basis or that inventory, I'll redraw them, right? So the stuff I drew this morning, I drew a cost basis from 49.23 to 41 and a half. So the discount zone at 2 times discount is down to 48.87 and 4 times discount is down to 48.13. So we're going to see if these lows hold or how they hold. What we're looking for here are clues. And it's pretty hard to find clues when the market's not open yet, because what's going on is speculators are just taking full advantage of this, right? Um, and even though some of those big speculators are going to sit out, right? Yesterday, when the market opened, if you looked at the order book, um, there was one or two contracts, and then there was blank spaces, and then one or two contracts, and then blank spaces. So if you entered an order to sell 20 contracts, you don't really know where you were going to get filled on the open. That's why you should never try and trade a volatile open as a retail trader. It's just beyond your skill. And the price that you see on your screen is probably not the price that you're going to get filled at. Right? There is going to be a lot of slippage because of a lack of liquidity. What's our volume here? 448,000 contracts, eh? Interesting. The NQ is down 5.8%. Yeah, it's a heck of a dump, eh, LC? We always said, right? How many years have we been saying when this thing comes apart, watch out? Well, here it is, right? Remember all those gaps on the way up, right? Some of those gaps they didn't fill. Well, they're filling now, right? Yeah, these are historic times, and they're very, very difficult. I would suggest putting your finances into education now. This is the best time to start to learn, because if you can learn now in these markets, this is the time that you should be. What would cleaning up inventory look like? Well, what we need to do, GL, is we need to find the bid. Okay? And that's what price exploration is. Like for right now, the bid's at 48.56, but that's a temporary bid. Okay? So what we need to do is, as these tariffs and the macro conditions change, right? What happens is securities analysts will build what we call models. And their models will tell fund managers where to start buying based on what they're seeing. Here's some short covering, right? So we got a little short covering, right? We didn't come down and take out that 48.50 stop. So there's some short covering. I imagine I'm looking, let's see where the sellers now step in, right? This is where you do market intelligence, right? I'm looking for sellers at 76. Let's see if they're there, right? This is a great time. See, 76. So for example, now that you know, like if you were long 64, you'd be selling 72, 73, right? Because this is what do you see what we're looking at here? This is a great time. That was a great timed question, GL. What we're looking for in the market is we're looking for it to do this on a daily. Do you see this pattern? Right? And then stability. And then this. And then stability. Right? What exactly that you see here on a 1 minute chart, that's what you want to see on a daily chart. You want to see that, what do you guys call that? Teapot and handle or something? I don't know what you guys, but that sideways motion where the overhanging inventory is absorbed into wholesale positions and then resold, right? Exactly. Exactly. Yeah, vacation sounds good, Elsie. See, and look, I mean, you learned something new here, right? Even if you learn just this, I drew that line before the market got there. You can rewind this. And I told you there'd be a seller at 76. And guess what? There's a seller at 76. Now, that is the cheapest, because it's free, indicator of what you fancy folks call order flow. Did everybody see that? It's really not that complex. The top of the candles are where the sellers initiate. How do I know that? Because I used to be the seller. So that's where they initiate. They're going to sell there again, unless they see large bids. Hey, Jonah, welcome. Thank you. Yeah, and you're going to learn things like that when you come into our room. You're going to learn why the sellers initiate there, right? This way you have real-time intelligence that's practical and that you don't need a dictionary to understand what I'm saying. I said they're going to sell at 48.76, so if you're long, get out before 76. There you go, right? And did we have any indicators on the screen or nothing? It's just a simple 1 minute candle chart. Now they're going to sell it back to that little cost basis, and let's see if it holds 56, right? If it can't hold 56, it means that the sellers have to compete and they'll sell under 56 because they have to, not because they want to. So give it some time, right? Because London's opening now, so that was a little bit of short covering when London opened, and they sold into it, right? They sold into that short covering, right? So when London was opening, the market came up. This Epic pen sometimes is a little annoying, right? The market came up, they had some position, they went and sold it. Wicks, I don't look at wicks or I don't care about what the candle looks like. I'm not a traditional candle guy. I just look at the top of the candle. Whether it's a wick or whatever you guys call it, it doesn't matter. I just care about the print. The print is the transaction. Does that make sense? It doesn't matter where it's a wick or whether it's, what do you guys call that? I don't know what you guys call that. All right? Doesn't matter here. This is where they stopped selling at 56. Why? Because there were some buyers underneath 56. So they stopped selling and they made the buyers chase price higher so they could distribute more. That's how you get rid of inventory, right? You guys all know that inventory is the stuff that this chart represents, right? Body. Thanks, Elsie. So it doesn't matter whether it's a body or whether it's a wick, it's the level. Right? If you look here, whatever kind of candle you're using. Now, LC uses HLC bars. Some people use those itchy and scratchy candles. Whatever you're using, just look at the bottom of the candle and the top of the candle. Doesn't matter what the hell it is. It'll tell you where the sellers are initiating, and it'll tell you where the sellers stop selling. Right? All you need to do is look at the bottom and the top of whatever type of a candle you're looking at. Right? It'll show you where they don't need to sell. So they don't need to sell under that white line, right? Down there at 58 and 3/4 or whatever it is. So they stop selling and they raise price and people follow it up. Now, there's that 59, 59 half, 58 3/4. Now, if they're desperate to capture the buying, they're going to sell under 58. Watch. There, see? Because there's competition, the sellers are going to sell underneath. Now they're going to try and take that K low. There's going to be some responsive there. See how they took it? Boom. Took the T low. Now we're going to go and try and test that overnight low down in the 32s. Okay? How many times have I been involved in trading halts in the S&P? I don't trade halts. I'm a retail trader. That's not for me to be involved in. Does that make sense, Jonah? That's just a really dumb way to do business. It's a great way to lose all your money, right? That there are times, you have to use common sense, right? When you're a trader, right? If you're in business, you've got to use some sort of common sense, right? Oh, witnessed? Well, there was COVID. There was, gosh, before I was a retail trader, I was a seller of stock. So I really didn't care what the market was doing, right? I cared because the retail programs wouldn't work when people are scared. So we would just sell stock. And then, like in 2009, 2008, after, you know, after the selling started to slow down, we launched a deal at 30 cents and took it to $2 and made a fortune because, we sold millions and millions of shares. Because when people lose money, they always turn to penny stocks, and it's a great time to promote a penny stock deal. So most of my career, until I started trading retail, we would just look, you know, at the overall market and go, oh, okay, it's really red today. Tell the brokers to, to reel it in. Don't force their clients to buy anything. No one's going to want to buy anything. Everyone's going to be scared. After that, and people turn from fear to greed pretty quick. It doesn't take long for people to get greedy again, right? They'll be scared for a little while, and then as soon as the clouds part a little bit, the greed will kick in, and that's when you can get them, right? Happens every time. What would a technical confirmation of a capitulation look like? I have no idea. I don't even look at stuff like that. I look for price stability. You know what I mean? Like you guys are looking for this thing to blow out and then stop, right? No, it's okay to be big brained. What I'm looking for is price stability on a daily chart. Check this out, right? This is going to make it really easy. Take a look at this. Does that look like price stability to you? Right? The chart's just going to switch over in a second. There's a bit of a delay today on YouTube. I apologize for that. Right? Look at the daily chart. Does that look like price stability? Right? Capitulation is something I don't even use that word. Right? I don't even use that word. Right? I what I do is I let the large institutions and the governments figure this stuff out. You guys, this is a time where everybody tries to be really, really smart. And when everybody tries to be really smart, I just go Forrest Gump, right? Life is like a box of chocolates. You don't know what you're going to get. Every day you have no idea what you're going to get. People who try and figure out what you're going to get, retail, we don't have that information. We can't process that information. That's why you have to let the market tell you. Does that make sense? So I don't know what the technical confirmation of capitulation is, but what I do know is when I see some price stability, right? When I see some price stability and when they start lowering margins, then, you know, yeah, it's usually not that bad, Kenny. Are you in my room? And are you trading tonight with $19,000 a contract to trade an ES? Usually the delay isn't this bad. Last week it wasn't. Today it's a little bad. And I apologize for that. But you can only do so much, man. You can only keep people happy so long. Well, that's why we have a 7-day free trial. And the delay really isn't that bad. So how about this? Join the room for 7 days, right? If you don't like it, if you don't learn more in 7 days than you would anywhere else in 10 years, I'll personally give you $40. How's that? Right? I'll put my money where my mouth is. And I don't think you're actually trading tonight. Right? I don't mean to be rude, but like, seriously? I do Zooms all the time. I do price action labs. I'm in the room pretty much 18 to 20 hours a day teaching, right? And I'll guarantee you I've forgotten more about markets than most of these furus will tell you. So take that with a grain of salt. LCS, you can get that deal. LC will take $40 off anyone. Let's see if we still have that seller at 48.76. Yeah, right now we're getting, what is it? It's showing 1736. Yeah, we got about a 20-second delay right now. So it could be my internet upload speed, right? Yeah, Kenny, you DM me and I'll take care of you. This is what we're looking for. You want to see this kind of thing on a daily chart. This is price stability, right? Here you're seeing it on a 1 minute candle. Right? I'll put my money where my mouth is, Kenny. You reach out to me and we'll have a chat. This is what you want to see on a daily chart. Okay? That's the price stability that you want to see. With the new volatility, I'm not going to trade at $19,000 a contract, Jonah. No, no. If I was trading right now, I'd have to use bigger stops. And I'd have to use a much, I would be trading way less. I would size down, and I would have to use larger stops. And the trade really would have to, there would really have to be an overwhelming business reason for me to take that trade, right? Because every trade is a business decision, right? Which is grounded in the simple principles of business, right? Supply runs out, price goes up. Supply is introduced, price goes down. So, for example, if I was trying to short here, well, so much for that, right? Now we took out that 76. Let's see if those sellers come back in, right? I understand everybody's trying to make a buck and stuff like that, but I'll tell you something. Most people don't have the humility to admit when the market is too fast for them or too volatile, right? And the best risk management is a little bit of humility, right? So I'd use the same strategy, but I'd have to use much larger stops, and the trade would really, really, really have to be like, JJ, you got to take this trade. There is a really valid business reason for the trade. Does that make sense? You could, Jiraj, but if you could just keep a mental, like, for example, like this area here under 48.76. Let's go draw a volume profile, right? From, say, that high to that low. Do you see how the position is here? So right now we're going to take this and we're going to try and sell it up here. But you know that there's a seller up here at 4,900. Does that make sense? So this is the inventory that was acquired, and now it's going to be disposed for profit. Okay? It's just like what you do every day, brother. So you could keep that like that red line at 76, but on a day like today, most likely all of these levels are going to be overrun because there is no the order flow, right? Order flow are the customers, right? So the order flow will not be consistent and it's not going to be reliable. So it'd be like you outside there trying to do business and an electrical storm comes and there's a bunch of lightning. The amount of customers that come to your place of business is going to be less, right? And it's going to be volatile, right? So let's talk about the business reason for a trade, right? So this would have been a look above and fail of 48.87. So you'd be shorting here, and 87 would be your danger level, and your stop would have been at the top of this candle here. That's a wide stop. So you have to determine, okay, if I'm short 86, 85, 84, can I afford to use a stop that large? Am I fast enough to execute and cover when we get down to 76 in a 1 minute candle? Are you fast enough? Are you skilled enough with manipulating your software that you can take that trade. If you are, fine. You have to be honest with yourself on your skill. If you're not honest with yourself with your level of skill, right, you're going to be in a lot of trouble. Okay? You're going to be in a lot of trouble. And that's why retail traders get into trouble, because they're not honest with themselves on their level of skill. Right? Everybody says, "Oh, you just trade your setup." Well, what if you don't have the skill to, right? You've got to take those things into account. And there is nothing wrong with saying, "You know what? I can't do this right now." Right? I don't have the level of skill to do this. Yeah, that's smart trader M, right? And you learn the hard way. Guess what? Are you going to ever make that mistake again? No. So when you make mistakes like that, you lose 40% of your account. Go and look at yourself in the mirror and go, that is the last time that's ever going to happen, right? Internalize that pain and use it instead of making excuses, right? Which the trading community, unfortunately, has placated people into making excuses, right? And it's okay to lose money and it's okay to blow up accounts. It's not. That's not how you do business. So if you had lost 40% of an account when you're on a desk, your job would be in question, right? So that's the last time that's ever going to happen. Say it to yourself and internalize it and make sure it doesn't. Exactly. You'd be fired, right? Now we're coming back down, right? Your losses are going to be because of your lack of skill in trading at the wrong time. You're trading a market that's too advanced for you. It's as simple as that. Nobody wants to hear it, and it's not a nice thing to say. But let's put it to you this way. If you were a first-year medical student, would they let you go and do brain surgery? If you wanted to be a Formula One race car driver and you've never driven anything bigger than a go-kart, will they put you into a Formula One car and go, here you go, right? Right? You're just trading beyond your level of skill. Last week, I barely traded. I took maybe a trade here and a trade there, right? Let's not get political, Luke. Okay. But, you know, you've got to understand your level of skill. You have to be honest with yourself, folks. There's nothing wrong with saying, hey, this is too much for me, and sit and learn, right? You know, you got to just be honest with yourself and go, you know what? This is too fast. It's too volatile. Let me sit and watch and see what I can learn, right? Because being a hero in finance is the surest way to be homeless, right? You got all these keyboard cowboys. So watch this. So now we've got a little bit of position here, right? We've got some position underneath 64 and a little bit of position underneath 72. So when the market comes into those positions, they stop selling and lift because the order flow is present. Make notes of stuff like that, right? Where's the position? Where do they stop selling? Right? Where do they initiate selling? Right? And those are the areas that you can trade between, right? Learn that kind of stuff and it will be very beneficial. I got about, the delay is about 20 seconds now. In volatility, it'll be worse, I imagine. Good time to learn. It's a good time to watch. And don't feel bad that you're quote unquote missing opportunities, because what you're really doing is you're saving your capital for when you can actually use it intelligently, right? Remember, this business is about the intelligent deployment of capital, right? You have volume profile, Jiraj. How would you see that without volume profile? Real simple. Check this out. What you do is you look, you see this? Where the most time and volume, where the most time is traded, that's probably where the cost basis is going to be. So if I went and I drew that, it'll be close, right? See? Do you see? The volume profile shows it, but we did it without the volume profile. See? This is that back and forth. That's what building the position is. That's like when you're going to your wholesaler and you're buying your inventory. There you go. Right? The other thing that LC just brought up is replay your charts, right? Chart replay is a great way to learn. It's like watching game film in football. The next podcast, I don't know, Jonah. I don't do the scheduling of the podcast. That's Ray and Steve. They come up with the guests, and then they just tell me, JJ, we're having a podcast. This is our guest. They do all the heavy lifting when it comes to the podcast. Wholesalers are never trying to support the market, Jiraj. The quickest way to living in a cardboard box on the street is to try and support a market. You look for price stability that wholesalers are not selling, because they don't, just like you, right? If you have a pair of shoes that you bought at $5 and you're selling them at 10, when you have to put them on sale, right? That's the drop, right? From 10 to 9 to 8 to 7 to 6, you will stop when you get close to how much you paid for your product. If there's nobody willing to buy it, you have to blow it out and sell it underneath what you paid for it. Does that make sense? You never, ever, ever try and support a market. That is the biggest fallacy that is perpetrated to retail traders. Wholesalers do not ever support a market. I saw a man lose $120 million trying to do that. He took a deal public, took it to $17. People started shorting it. He started buying back all his stock, right? When it was done, he had blown through $120 million trying to support his stock. Whereas what he should have done is sold everything he had, right? Take the stock down to like a nickel from $17 and then reverse it and start all over again, right? You never ever try and support a market. And buyers, The only time buyers are in control is when a market is moving lower and it's being put on sale. When the price is going up, sellers are in control because they get to raise price. People always screw that up and go, oh, buyers are in control. Really? If something's $5 and it's trading at 8, think about it. You want to pay 10? What kind of control is that? Right? Use common sense, ladies and gentlemen. Right? I know it's old fashioned, but common sense will really, really help you in this business. Okay? Ah, there's the overnight point of controls down here. Okay? So it's moved down, and what that tells us is there's some accumulation in this area. Look, Jiraj, we came right back to where we see. We bought it here, right? We sold it here, and we put it back on sale, and we came back to right where we bought it. That's all there is to this business. See? Now, if things get really bad, we'll take out that low, right? In a normal market, we would stabilize here. Here, I don't know what we're going to do because it's unpredictable. See? Good stuff, folks. Right? As the old guy in Hill Street Blues would say, let's be careful out there, okay? Be smart. Don't be patient, be smart. If you're smart, you will automatically be patient. Okay? Take care of yourselves, folks. Thanks for joining us. We will see you at 9 a.m. Eastern Time for the next session. And please come visit us at microefutures.com. Right? I promise you I will keep you out of trouble if all you got to do is listen. Right? All you have to do is listen. Okay? Come with an open mind. You don't need anything else. And we will teach you all you need to know. Right? Be safe. LC, get some sleep, man. You're going to be a walking zombie in the morning. Thanks, everyone. Hey, Corey. Thanks. No problem. Have a good morning. Be safe out there, folks. Bye for now.